So one of the biggest surprises for a new mortgage broker is how uneven year one income can actually be. You see, two people can start at the same time, pass the same exams, and work just as hard, and yet earn wildly different amounts in their first 12 months. This gap isn't about talent, it's about structure, exposure, and the speed of responsibility. You see, in this video, I'm going to break down the real factors that determine how much a mortgage broker earns in year one and why effort alone is not going to be enough. So does the employment model actually affect your year one earnings? The answer to this is yes, significantly. How you enter the industry shapes both your income and your learning curve, okay? Employed trainee roles are going to be more stable income, they're going to have lower upside early on, and they're going to be slower exposure to full responsibility. You have self-employed roles or AR routes, and they're going to be no guaranteed income at all, paid only on completion, but there's going to be much higher variance on month to month. Now, employed roles smooth the early months, but in self-employed routes, they amplify both the upside and also the risk involved. Neither of these, by the way, is better, but they do produce very different year one numbers. So then how does speed of responsibility impact your earning potential? Now, this is one of the most overlooked factors I see time and time again when speaking to new mortgage advisors. You see, income grows when responsibility increases. This is things like how quickly you're allowed to run the full client calls, how soon you handle submissions independently on your own, and how fast you're trusted with complex cases. Now, long shadowing periods, they're going to feel safe, but they also delay your earning potential. Now, the faster responsibility usually means you're going to have faster confidence, faster competence sign-off, and faster access to commissions. So then how important is the lead source in year one as well? How does that affect it? Well, it is massively important. Not all leads are equal, especially early on. You see, provided warm leads, they're going to have higher conversion, quicker completions, and more predictable income. Self-generated leads, though, they're going to be lower volume early, there's going to be more skill building, and they're often much slower in year one earnings before they actually start to kick in. You see, warm leads will help you learn the job faster. But self-generated leads, they're going to build long-term independence, but usually at the cost early on. Well, then you have the question of, does admin support affect how much a mortgage broker earns? And the big one with this is yes, more than most people actually realize, okay? The time spent on admin is time not spent advising. So high admin workload is going to equal fewer cases handled. Poor systems is going to be slower submissions and completions, and strong admin support is going to be more client exposure. In year one, the volume matters more than perfection. So good support doesn't just reduce stress, it directly affects your income. So then how do commission structures influence your first year pay? See, two roles with the same salary can produce very different totals. Common early stage structures include a salary only, so no commission at all at the beginning. You might have a small per case bonus. You may get a low percentage split, maybe 5 to 20%, or you may have stepped commissions tied to competence. Now, the key isn't generosity here, okay? It's clarity. Clear progression beats vague earning potentials every single time. So make sure you know what it is that you are signing up for. Now, does background experience, though, make a difference as well? Absolutely, it's going to make a huge difference. Your starting point matters. Sales experience is going to improve early conversions. Banking or advice experience is going to speed up your trust, and industry familiarity is going to reduce your mistakes you make at the beginning. This is often going to lead to things like a higher starting salary, faster sign-off periods, earlier access to commission. It's not, though, about being better. It's just about being quicker to deploy into the industry. So do case types affect your year one income as well? Yes, they do, because complexity will affect speed. Straightforward resi cases, which is, by the way, is residential cases, they are going to complete much faster. But self-employed or specialist cases, they can take a little bit longer because you're going to do more research and you don't know what you're looking at. And complex lending, that delays even further. So in year one, slower cases can distort income even when effort is really high. You're really working your butt off, but it's not working. You see, this is why some brokers work constantly, but they have very little early on. It's a really common thing you see. So then how does personal financial pressure affect the earnings as well? Well, this one is uncomfortable, but it is very, very real. And we're going to unpack that right now because this is a very true thing I see all the time. In fact, I even faced it myself. You see, financial pressures pushes people to rush, and rushing leads to mistakes, and mistakes slow progress, and they make you less confident. They drastically slow down that confidence, because those who can afford patience, they're often going to do better. They're going to learn more deeply, they're going to progress faster after sign off, and they're going to earn more money in years 2, 3, 4, 5, and 6, and go on, you know. So is year one income a good measure of long-term success? Not at all, okay? It's not going to be indicating what you're going to do. Your year one income is going to reflect how much structure you have, how much supervision you have, and more importantly, how much opportunity you have had available to you. That is not long-term potential at all. Many high-earning mortgage brokers started very slowly. Many fast starters plateaued, maybe even crashed and burned. You see, I've seen it happen over and over again. The first year is about becoming useful, not about maximizing your income. If you chase the money will run away. But the big question you have is, how much money does a trainee new mortgage broker make? And I unpack that in this video on screen. Give it a click.